Well, good afternoon, everyone. You know what I'm talking about here. Snapchat stock, right? You know we had to. I went ahead on Sunday, told you, buy some puts for this company, right? Told you buy the puts. Things down 6% after hours, after reporting earnings. I mean, I'm just going to tell you, that's what I told you to do. But regardless, I did not practice what I preach because I didn't do such a thing. Sorry. I'm being a little bit of a baby right now, so let's still look at these earnings and see why the stock's down, because obviously there was definitely many catalysts to boost it up. We talk about the potential of big user growth because of pandemic and lockdown, but you see the negatives like ad rates and how that would affect this company. So let's take a look, and actually from an earnings perspective, they did a darn good job. EPS overall, non-GAAP of negative 9 cents, GAAP EPS of negative 23, which was in line. I expected a miss on that, so I'm pretty excited that they were able to do it. Obviously not profitable, but this company hasn't been, so not bad all things considered. Revenue up 17% year over year, beat by 9.64 million. Overall, a good beat for them too. You like to see that 17% growth year over year is nice. And global daily active users, which was the metric I was really looking for, was up 17%, but it was short of the consensus, which is definitely part of this downward movement. Average revenue per user, though, was $1.91 versus $1.81 expected, so a beat on that aspect. As long as we look at some of the finer details. Daily active users rose 17%, slightly worse than expectations. Daily active users were up sequentially and year over year in North America, Europe, and the rest of the world. Those gains were all spread over iOS and Android platforms. The company pointed to increased engagement, with Snapchatters on average opening Snapchat more than 30 days a day this quarter. Excuse me? 30 days a day. 30 times a day is what I'm assuming they meant. 30 days a day. That's Seeking Alpha for you, baby. Meanwhile, the average number of Snapchatters watching shows rose 45%, which is a big thing for them as far as ad dollars as shows is concerned. So you definitely like to see that improvement if you're a Snapchat investor. And those over age 35 engaging with Discover content was up 40%. And again, that's all ads, so that's something that you like to see for this company. Net loss widened to $326 million from a year ago loss of $255. Not unexpected because you talk about pandemic quarter. I mean, every company is really reporting a bigger loss than they expected. So definitely not good to see that aspect, but you know, what can you expect with everything going on? Operating cash flow did improve to negative $67 million versus what they did last year was $29 million worse, actually. So they did improve free cash flow at least. And here's the deal. Here's why the stock's down. They are not offering quarter three guidance. That's right. That's why the stock's down. People are anticipating big numbers, and they're not going to provide guidance. Thus far in quarter three, we estimate year-over-year revenue growth to be 32% through July 19th, I should say. And while they're cautiously optimistic those trends will sustain, conditions could still deteriorate. For example, advertising demand in quarter three has historically been bolstered by factors that appear unlikely to materialize in the same way they have in prior years. Again, we talk about back-to-school season, film releases not necessarily being the case, operation of various sport leagues. We also think about companies that aren't really spending that money on ad dollars right now. A lot of companies that can't advertise right now because of, can't find much demand. Whenever they're shut down, they're not advertising, right? Just makes sense. Our best estimate at this point is that our full quarter revenue growth rate is likely to be below our quarter-to-date estimate actual growth rate, and as a result, we have built our internal investment plan based on revenue growth of approximately 20%. So, again, you see definitely a hit on that aspect. If we looked at the slides, which we like to look at, we love to see slides. So we saw everything about daily active users. There you go. Snapchat opened 30 times every day in quarter two. That's pretty big. I can't say I wasn't part of that, but then again, we talk about this Discover platform on the right-hand side of the app. I've never touched it, but I know a lot of people, I guess, clearly do. I couldn't imagine it's just full of spam ads, so I'd have to not a fan. On average, 180 million Snapchatters engaged with augmented reality daily, as in filters. So that's quite a big number. We added new camera patterns, such as Plant Snap, Dog Scanner, and Nutrition Scanner to provide more experiences for the community. They announced Voice Scan, which allows Snapchatters to activate AR lenses with their voice. Local lenses, which enables shared and persistent AR experiences in much larger areas around the world. Music lenses and dynamic lenses. Pretty cool stuff as far as what they're doing there. No doubt about it. They strengthened their ad platform by introducing brand profiles, pretty big. First commercial as well, which gives advertisers a way to reserve the initial commercial a Snapchatter sees that day. So it's right as you open up what's going to be on the top of that Discover page, which, again, I don't touch, but companies can do that. So pretty cool. Focus on the future and community. Obviously, they talk a lot about that, but we love to see the chart revenue by geography. You see growth pretty much everywhere. Rest of the world, kind of a lag, but U.S. you see good growth in North America, no doubt about it. A little bit of a decline quarter over quarter, but you'd like to see better. Again, it's an issue of ad rates, so that's why you see a decline quarter over quarter. Nothing too unexpected there. Daily active users, though, you see a steady climb pretty much everywhere with daily active users. That's a big thing. Average revenue per user, you also see growth, but the issue here going to be it's flat year over year, but a lot of that is entirely due to the fact that, well, you know what? Revenue per user declines whenever you see a decrease really in ad spend, and rest of the world took a big hit on that, down to 89 cents versus $1.20 last year. So definitely a big portion there. Operating expenses did rise just barely year over year. You don't like to see an increase there, but I'd like to see a better pattern for this net loss. I really don't see a better pattern. I'm sorry about it, because right now we're just as far off as we were in quarter one 2019. Further off. Quarter one, even though which wasn't really impacted by pandemic, was just as bad as quarter one of last year. So it's not really where I'd like to see for this company. That net loss is just not pretty at all. It's not pretty. There's not a good pattern. That's why I don't personally invest in this company. Not a good pattern. I'd like to see better. You can do better. No guidance given, obviously. I don't know if they are going to. They're not going to. So you know what that means. We're going to go to. Oh, it's already auto-filled, baby. We're going to look for the real quick balance sheet and call it a good one. But, it'll load. I promise you. Like, there's no way this press release won't load. There's no way. Whoa, it loaded. Okay, let's look at this balance sheet, okay? Cash and cash equivalents on this company of $1.2 billion right now, and they give against a 6 months ago of $520 million only, so big increase there. Total current assets of $3.2 billion versus $2.6, big change. Total assets in general of $4.7 versus $4 billion of 6 months ago, so really $700 million improvement there. But the question is, do you see debt increase that much? And well, you do. So total liabilities overall in this company are $2.5 billion versus $1.7 billion of 6 months ago. So they actually increased by more in terms of liability than they did in assets. So I don't like to see that, but you do see stockholder equity of right around $2 billion, which is good on this aspect. So you got to give them credit for that. So that's all I got for Snapchat for you. I don't think this is one that I'm interested in buying at all. Negative earner, and they don't show signs of improvement from my perspective. So Not one I plan on investing in, but if you are, I get where you're coming from. I can't make myself do it. Wish you would have bought puts when I told you to, though. Just saying.